Hi everybody, this is Colin Abrams. I want to talk to you just very briefly, a very short clip on the US yield curve inverting. This has been big news over the last few days. The 2-year, 10-year yield curve in America has inverted. What does this mean for the market? We saw that the Dow Jones plummeted 800 points on Wednesday night when the yield curve inverted. And this is a classic reaction of retail traders panicking and dumping their stocks. But it's very important to know that while a recession will occur after the yield curve has inverted, the question is how long does it take for that recession to begin? And recession normally means a bear market in stocks. So if you take a look at this chart here, courtesy of a company called Canard Capital in the US, this is the 2-year, 10-year yield curve. The red shaded areas are recessions. This goes back to the 1970s. And this line here, 0, is where the yield curve inverts. When the yield curve goes below that line, it inverts. This chart is just a couple of weeks old, so right now this line has gone down below 0. That shows the latest inversion of the yield curve. Now the question is, and this is the crucial point, when should one sell one's stocks? And if you look at this chart, while a recession has followed 7 out of the past 7 times of the inversion of the yield curve, the crucial point to note is that the recession, meaning the bear market, has followed on average 19 months after the inversion of the yield curve. I'll say that again, on average, a recession or bear market has started 19 months on average after the initial inversion of the yield curve. So what that means is, with the yield curve having now just inverted again, that is actually a bullish sign for shares. I'll say that again, the yield curve having inverted this week is a bullish sign for US stocks. It means that the US market is going to rally again. In the very short term, while the US market might come down a bit, one should be viewing this sell-off that we've had for the last few weeks as a buying opportunity in the US markets. For example, in 2007, when the yield curve inverted, it took 22 months for the bear market to begin. And within those 22 months, the S&P 500 rallied 24%. So please, this is not a chance to panic. This is a chance to look at buying this correction in the US markets. The inversion of the yield curve indicates that the markets are still going to run. It's going to still take quite a while for the recession to occur. It might be later next year. It might be 2022. But this inversion is actually a bullish sign for the markets. And one should not panic at all, but look to be buying the US markets on further weakness. That's it for now.